Okay, I guess everybody has decided to wait for the video on this one. I will go ahead and start by myself. Share my screen. So this is the midterm from spring of 2020. And so it consists of 3 tabs. One is the adjustments. There are 5 adjustments to be made. There is an accountant's worksheet with the unadjusted trial balance on it. And this was given in paper, so the formulas for column H through M were blank also from a paper version. But on your version, I'm going to leave it. So as you make adjustments, it will automatically, like if I put $100 in here, it automatically updates the adjusted balance. And then there is a tab for financial statements. So the object is, and what yours is going to be is just like the first midterm, it's going to be similar in nature. It's not going to be exact, but it will be similar. It will cover the problems in the back of the book. So the most comprehensive of which is 4-51. I did 3 and 4 in my recordings. 3 had 4 adjustments and 4 had 5 adjustments. There were also some adjustments for number 5, these 6 adjustments here. And so if you this is probably the most comprehensive. So if you know what is going on here, then you can certainly answer the questions from the midterm. All right. The midterm, once again, is going to open up on Monday, the 5th of October at 8 o'clock in the morning. It will consist of the one file, the Excel file, that will have these adjustments laid out for you, 5. Each of the 5 adjustments are worth 10 points apiece. And then you'll do 3 financial statements, a multi-step income statement, and I'll show you what I mean by that, which will be worth 20 points, a statement of retained earnings, 10 points, and a classified balance sheet will also worth 20 points. So let's go over the adjustments, each of one of which, as I mentioned, is worth 10 points apiece. Office supplies used during the year amounted to $7,149. So if you come down here, you have an office supplies expense. You're going to debit that expense. That's the income statement account that's going to be adjusted by the $7,149. And then the balance sheet account is going to be office supplies. So that's the debit and credit for the first adjustment. The second adjustment is depreciation on the office equipment amounted to $14,299. So this is going to be depreciation expense. That's the income statement account. And this contra asset account, accumulated depreciation. Don't credit the actual office equipment. You credit the contra asset account, accumulated depreciation for office equipment. Item C, accrued interest on notes payable amounted to $2,863. So that is interest expense, is the income statement account. This is an accrued expense. The previous 2 were deferred expenses. This is an accrued, and we have interest payable as the balance sheet account. Item D, services totaling $28,597 had been performed but not yet billed or recorded. In this case, the debit is going to be accounts receivable. This is an accrued revenue. So the balance sheet account is the debit, and then the credit is just revenues. And then lastly, salaries total incurred by year end but not yet paid or recorded amounted to $2,384. So this is going to be salaries expense. This is an accrued expense, and wages payable. So once again, we have a debit to office supplies and a credit to supplies. We have a debit to depreciation expense and a credit to accumulated depreciation. We have a credit to interest expense, a debit to interest expense, and a credit to interest payable. We have accounts receivable and revenue. And then lastly, we have interest expense, we have salaries expense and then salaries payable. So those are the 5 adjustments. Your worksheet will automatically carry those across the debits and credits. So if the account had a debit balance to begin with and you made a debit adjustment like you did in adjustment D, it will add those two. If it had a debit adjustment and you made a credit adjustment like A, it will subtract it. Credit balances with a credit adjustment adds, like with accumulated depreciation and the revenue, adds those together. Salaries expense had a debit, made a debit adjustment, added those, and then all the 5 in the bottom are brand new, just carrying the debit or credit balance over to their respective columns. So the financial statements, the multi-step income statement has revenue less operating expenses. So salaries, rent, utilities, depreciation, and office supplies. Gives you total operating expenses. Subtract that from the revenues, you get the first of the subtotals. So a multi-step income statement has subtotals to provide more insight and understanding to the readers of the financial statements. So income from operations is $19,063. Other revenue and expenses is interest expense. Subtract that, you get income before taxes, $16,200. And that's the second subtotal. And on the 2 examples in your book, they didn't give you an income tax expense, so that subtotal is not present in the videos for the chapter, but it is on this midterm. And then income tax expense of $4,760. Subtract that, you get net income of $11,434. The statement of retained earnings started with $6,673. We add in the net income that we just calculated, get a subtotal of $18,107. Subtract the dividends that are given. Dividends is on the worksheet. You can see that right here. And that gives you retained earnings at the end of 2019 of $13,341. The balance sheet is a classified balance sheet. So for the assets, you're going to break them between current assets and property, plant, and equipment. So cash accounts receivable, office supplies, and prepaid rent are the three current assets. Those are cash, what you're going to turn into cash. Accounts receivable is going to be turned into cash. What you're going to sell, this is a service organization, so there's no inventory to sell, and what you're going to use up in the next 12 months. And you're going to use up office supplies and prepaid rent. Property, plant, and equipment is the office equipment less its contra asset account of accumulated depreciation on office equipment. That gives you a book value on that asset of $33,363. Add that to the total current assets, you get $238,787. Current liabilities are everything that is due and payable in the next 12 months. Accounts payable, unearned revenue, income taxes payable, wages, and interest. That totals $138,701. Notes payable is long-term because it is due beyond the 12 months. I mean, right now it is 12/31/2019. The note payable is not due till 2025. It gives you total liabilities of $219,727. Common stock has $5,719, and you don't need to put in the notes, $1 par value, 5,719 shares issued and outstanding. That's the proper way of presenting it, but I'm not going to count off on it if you don't. The retained earnings from above, the $13,341. That gives you total stockholders' equity of $19,060. Add that, and you get the same $238,787. And that is the midterm. So 5 adjustments, each worth 10 points apiece. The multi-step income statement worth 20 points. Statement of retained earnings worth 10. And the classified balance sheet worth 20. So that is going to be that. So let me know if you've got any questions. I'll be around and available via email and text as always.